crazy that S&P is showing a lot more strength. It's pushing upward where NQ is a little bit lagging right now,
I know.
but it's still trying to push. So
It is. Both of them are. But I guess we'll see. So on that note, updates, announcements, every single thing else. Does anybody have any questions? First off, there was a person in the beginning of the chat who said, can we talk about these levels? If you're still here, I will talk to you about it. And if anybody else wants to talk about it, I can too.
It looks like he's still here.
Let's see. Well, he might be working. So I'm going to go to a pair that I don't have anything on right now, to an instrument more accurately. Oil. Let's go to oil. Why not? We haven't taken any class trades on oil, so it doesn't matter. I'm going to take off the indicators. Vital indicators. Notice how the breakout indicator has this grayed out area for New York. Okay. I already know the New York session. Of course, we can put sessions in there and stuff too. I just choose not to. When I draw these lines, these little blue and red lines, all I'm drawing up are pre-market highs and pre-market lows, yesterday's highs and yesterday's lows. So you can go to the 1 hour, you can go to the 30-minute, depending on what price action is doing. Oil might be coming up. That would be good. And I'm going to right click. I'm pretty sure we don't have any trades on here. So I'm going to right click, turn everything off. All I'm doing is, mind you, this is now a new session here, but I grab my vertical, my horizontal ray, okay? I'm taking the high of yesterday and I'm making that a blue line, okay? I'm taking the high of the session between 4 a.m. and 9:30. In this case, that would have been this candle right here, that 9 o'clock candle, okay? The high was here. And if I went to, you'd actually probably have to go to 30-minute to see this accurately in this case. That's the high that we've achieved from pre-market since pre-market has happened, right? From there, all I'm doing is I come in here, I grab, again, my horizontal ray. I'm marking up the entire low from yesterday between 9:30 and 4 o'clock. Now, granted, those hours are a little janky and it depends on who you ask, because the actual definition might be different than this line you see, might be a little bit different than the market you're in, but in general, it's from 9:30 to 4 p.m. But that's what yesterday's high and close is supposed to mean. So I've got yesterday's low, yesterday's high, pre-market high, and now I'm looking for the lowest place for pre-market is here. So now I know basically the direction on the day from yesterday and the direction on the pre-market. If I don't put the indicator, if I don't put the breakout, if I don't put anything else on here, let's say we open here, which we did, we opened somewhere in here. As we get to pre-market high, and remember, we'd be going down to a smaller time frame, break above it and retest, we have a direction. We know we'd be targeting the next high, right? We know we'd be targeting a 1-to-1, a 2-to-1 or better. We'd be looking over to the left for what I call areas of interest. To give you an idea, just really short view of that. Area of interest would be before the peak. So think order blocks, fair value gap, sure, imbalances sometimes qualify, but if I wanted to keep this as simple as humanly possible, I'd be targeting, cool, we broke this. Let's say we broke yesterday's high and pre-market high. We've got our direction. I'm going to be targeting measured moves, A, risk to reward, B, and or areas of interest, C. Those three things. Really, really simple, easy peasy, no drama, no nonsense, completely solved. You're good to go, okay? How I mark up those areas of interest, which I haven't really been doing that here per se, but I'm coming here. This is the 1 hour or 30-minute time frame in this case. I'm finding areas where I even have it labeled in here. If I go to a template, it's my area of interest. Cool, I've got one here. I've actually got another one in here, really close to that, a little bit above that pre-market. So that yesterday's high, I'd really like this one a lot. So we've got, there's a lot of touch points, right? You've got price reacted here, price reacted here, price reacted here. And if you're not sure, go put on the candle view. Oh, that's not a candle. I think I know better. Maybe. You can see how often price got stuck in this range. And we even wicked back into it. There's just a lot going on right there, right? I personally would say the line, oh, look at that jump. Beautiful. Holy moly. Nice move though. Taking my little area of interest. Gonna mark this up. These are the areas that I'm considering. It's really, really tight above that area. Cool. That's what I would be kind of looking to accomplish, is to get that little piece out of the move. So remember, if I'm breaking above a pre-market or yesterday's high, I'm looking on a smaller time for a break and a retest. As long as I've got that confirmed, I'm targeting either the next pre-market or, yesterday's high. You can also look at midnight opens, Asian sessions, etc., London. I just like this way personally because it's more easily defined. Beyond that, I'm looking for what? Measured move, measured meaning the amount of percentages we moved on today versus where we started at. Or B, a risk to reward, or C, I'm looking for my areas of interest. And that's it. Very, very simple. Done. If you have good management, we would be out on the day, and it's simple. It's clean. There's no drama. There's no nothing. But that's what I'd be doing. Again, no strategies. So when we add back in strategies or breakout, for example, wow, that was a big move. Big, beautiful move. That is still not a candle. Candles, there we go. Of course, now we've got the breakout. So this happens to be the 30-minute time frame. If I'm trading on the 30-minute, I want to see that we respect that and stay above it. Otherwise, we might just be grabbing liquidity and then drop in the other direction, right? So we want to be careful with the whole bigger time frames like 15-minute and 30-minute for sure. But otherwise, same kind of concept. We're breaking out, we're closing above. I'd like to see on a smaller time frame that close and preferably a retest or at least the close, right? And I'm targeting here. If we manage to break above, close, and retest, I've got new targets to go. The benefit of really taking this one trade and taking it to its full capacity is it's time consuming, it's frustrating, it's sometimes you lose. I get all that stuff. But the other side of it also is if I have to go find 5 trades, I'm very likely to make a mistake, right? I'm very likely to take some losers. Taking this one trade and letting it get to here, for example, or here, for example, or here, for example, as opposed to, again, same trade, same markups. This is our 2-minute. As opposed to I took this trade, it came into here, I didn't let it get to here. Now I've got to take this trade and this trade and this trade and this trade. It's just a different principle. But you can do it either way. Obviously, if I extend this range out, this is the break. This is where you get your little arrow. This is your target. You hit your target. This is the 2-minute for 9:30 open. And it just works. It's kind of a beautiful system. Those purple boxes that you see me draw, those are typically imbalances or fair value gaps. I didn't know what a fair value gap was by definition for many years of my trading, but I knew and understood for imbalances. I knew that. I didn't know a lot of the definitions that I know now, but I found an easy way to mark up areas of interest because it worked for me. It made sense versus trying to have to define the difference in the premium, PD arrays and the order blocks and the fair value gaps and the structure and the supply, the demand and the weak key zones and the strong key zones and pivots and quarter points and measure moves. Like instead of having to know all of that, being able to see prices that price reacted at a lot and targeting a sound risk to reward or targeting before this high. Because what happens sometimes we don't actually break the high. Sometimes we don't actually take that liquidity. And or especially in the FX market, which is where I come from, you might have taken the liquidity, but the spread opened up so much at this level that your take profit didn't get filled. So you were right, but you didn't actually close the trade and came all the way back. So for me, I would typically put my take profits before that peak just to kind of make sure I capitalized on it to the best of my ability. Well, let me know if that helps. Let me know if you have any other questions. That's something I would love to go over because honestly, that's going to be the big difference in what a lot of people experience. A lot of this is very easy. Yes, you will also have to be able to manage this trade where maybe it doesn't hit exactly that target, right? So this trade, great trade, it breaks out, it's profitable. This trade is obviously better, but it's not better instantly. It's better here, which is many, hours later. And most people don't have either the time or the patience. And in my case, it's definitely both to take this trade and wait till here and watching it. Like it's just a lot. So
the thing to pay attention to in that situation is that, if you look left, you've got a major pivot right there. When you form that wick, it's good to be thinking about management.
you're talking about this, yeah?
Yeah.
Little baby gap or gap filled there. But we'll see. That's what I do. Again, if you just had something like the breakout strategy and a good way to kind of see key areas, and I don't care what you define them. I don't care if you like Bojangles' version on YouTube or so and so's or Mark Douglas. I don't care where you get it from. I care that you can see it, you can define it, and you can consistently do it, because trading is not as sexy and as like new and exciting as people make it, and that's why people quit and are always hopping from strategy to strategy. When you're good and profitable, you're not switching 1,000 things because you're profitable, right? But that also is mundane and boring and can be kind of dull in its own way, right? Don't get me wrong, making money is always nice, but it's you start to try to break what's not broken for all kinds of different mental, emotional, profitable reasons, dumb reasons, smart reasons, and everything in between. My only request for you or my best friend or my son would be, pick a strategy. It can be this one or not. Pick whatever one your eyes, your schedule that aligns best with how you want to trade. That's step one. Okay, we're going to create rules for that. That would be step two. We're going to make sure we have some methodology to clean up the charts, meaning I can see pivot points, or I like quarter points, or I like basic supply and demand. Think of the old meta quotes like supply and demand boxes that, those indicators withdrawal. I don't care which method you use to find that information. I just care that you use it. Maybe you like trend lines better. Cool, but have some way of marking up a chart and kind of seeing key levels of reaction. And I don't care if you follow the ICT principles or what you want to call them, because to me, every one of those defined things are all looking for the same thing, which is a reaction at that level. The reaction might be we're looking for it to bounce off of it or to break through it and retest it. But whether we call it an order block or a fair value gap, or we call it an area of interest like I do, or we call it a trend line, or we call it a structure or supply demand, it doesn't matter, because every one of those things, we're looking for a reaction. That's the purpose of the thing on the chart. So when we get the reaction, we have to have the plan and act of what we're going to do, the model, the strategy that tells us what we're going to do, how we're going to use that zone, that area, that as a target, as an entry, as a decision point. And that's what I would say, is you need that way. And I don't care which one you choose, but that would be the final step. And then you clean it up with good management. And then you get so good at it, it's boring. And then you'll start making money. Probably not too far before that. You might, pass a couple challenges, get a payout or two, but big picture after cost, probably not too profitable until after you get to that point.